The 25th of August 1987 was peak market pre-crash of October 87.
Yeah.
I knew absolutely nothing.
Yeah, so let's start right at the beginning. August of 1987, when you got your start in the markets.
Yeah.
Take it away from there, man. The S&P at 340, gold under 500, and US 10-year yields at 9%.
So, fun times in London.
Right.
Teenager coming out of school.
How old?
17.
17, right onto a desk.
Yeah, well, not quite.
But close.
But as close as you can get. And it wasn't on a desk, and you weren't on the phones because there weren't enough phones for everybody. You weren't in front of screens because there weren't enough screens for everybody. So you had to work your way up.
Right.
And that was post Big Bang in London. There were some real jobs and real people in London in those mid-80s.
And you got started right on the buy side, correct?
I did get started on the buy side. I was very lucky. There were some people that decided to take a bit of a punt on someone that was fairly good with numbers. Mm-hmm. That happened to be me. Yeah, it was a really fun time. The 25th of August 1987 was peak market pre-crash of October 87.
Yeah.
I knew absolutely nothing. And everybody around me was busy, and they were busy learning, they were busy trading, they were busy asset allocating. And then after August of 87, in October of 87, we came up with a bit of a crash. And those days were amazing, because when you know nothing, you learn everything.
Yeah.
So through the days in London, there was the hurricanes in 87. Lloyd's of London was basically, it was touch and go whether they were going to be around.
Right.
They had massive losses. The crash of 87 in the US stock market. And there was one particular day, I remember it, I turned around to a colleague of mine, really senior, great asset manager. And I turned around to him and said, so yesterday we were buying, but today we're not. Can you explain that? And he politely asked me to sit down and mind my own business for a minute.
Stay out of the way for a bit.
That's right.
Yeah.
That was right. So that was 87.
So now you're in the middle of the firing lines. There is a market crash that takes the S&P down 22% or so.
Yeah.
And we probably wallowed around those levels for the next year or two before I guess the S&P broke out again in 1990. But what stuck with you from back then? What lessons did you pull away from being in such a volatile market with such little education at the time? Because I know all of that gets flipped on its head to where we are today.
Right. That's really interesting. What do you learn from 87? You learn from really smart people in 87 to keep calm. That if you can keep your head while all about are losing theirs, you're going to be just fine. And that's really difficult to do in high volatility environments.
Yeah.
But that's what I learned from 87.
That's a very good point. So from there, you started making observations on markets, taking them very seriously, and picking up some tools into your toolkit as you grow, right, as a trader. So into the early 90s, we kicked the decade off with a war in the Gulf. We start moving into the very, very beginning of the internet boom, the infancy stages, I would say, in the early 90s, 92, 93. Tell me about your experience on the buy side as a young, now, someone in your early 20s going into that experience.
Right. So 1990, you've got Gulf War I. And the experience from 87 takes you into Gulf War I. Because when we started to rise in volatility in 1990, you could turn around to people and say, I've seen worse. So all of a sudden, you weren't panicking anywhere near as much as you were in 87. Fast forward into now, you're catching a bit of a wave of a bull market from 91 through 2, 3, and into 94. So now you're into 94, and you start getting an IPO calendar that is taking flight. Right. So every day, every week, you've got these red herrings coming through the post. And you're having to read these red herrings. There's no email. And you're placing orders to buy these IPOs. and every day there's more IPOs. Now, the history has told you, if you could sit through 87, through 1990 and 91, you were in a bonanza situation in 94 and into 95.
Yeah.
Fast forward, you start getting into the Fed, cheap money, Greenspan doing everything that he can do to calm everybody. Then Greenspan turns around and says irrational exuberance,
right.
And you think the bubble has burst. Far from it.
Yeah, exactly. So we keep going.
And we keep going. We're into 97.
Now we've got Amazon is delivering everything to your house already, right?
Yeah.
Starting with books and CDs, but we're getting there.
Right. But then the real trades are, if you can hang on to the bull market in the US, your real trades are being driven by currencies and being driven by rates. So with Russia having its troubles in 97, the US didn't care, as in the US stock market really didn't care.
Right.
Fast forward 98 and LTCM blows up.
Right.
So the lesson of 97 into 98 is, as much as you think it matters in Russia, it doesn't matter until it's on your doorstep. And your doorstep was LTCM in 98, which was another episode of, if you can keep your head while all about are losing theirs, you were in great shape.
Right.
Because then you rode late 98 into 99 into early 2000.
Right. So now, were you actively, do you recall yourself thinking about your first days as a trader and the stock market sort of crashing back then, back in October of 87? You know, are you worrying about this the whole time? Are you seizing your opportunities on all the dips and stuff?
It's so funny you should say that. That's so true. In your first experiences, you always think they're going to be replicated very soon.
Right.
And it's good to have that as a mental record, but it's fatal for being able to trade correctly because you miss your opportunities.
Right.
And that's when you try to gauge when you have opportunities. Are you in a bull cycle? Are you in a bear cycle? Are asset prices going up? Are asset prices basically going down? By the way, asset prices going down might mean asset prices are just flat,
Right.
which is what we have now.
So the markets are rallying ferociously into 98, 99 toward the dot-com bubble, which we haven't gotten to yet. But in 1999, I know you made a tremendous life decision to change time zones, life centers, and everything.
Right. Yeah,
Tell me, what was that about? How did you pick yourself up from being so entrenched in the markets in London and saying, okay, we're going overseas?
Yeah, that's interesting. So early 99, I get a call from the company in New York, Sanford Bernstein, and they basically asked me, do you want an adventure? And I thought to myself, I've traded US now for 99, probably 8 years. I've been observant of the market now for 12. If you want to be in the lion's den for US equity trading, you have to be in New York. So I said I'd love to be part of that adventure. They were kind enough to say, we'd love to have you. And off I came from London to New York. Now, the interesting thing about moving countries, and a lot of your viewers will see this, a lot of people will understand what I'm saying, is it's damn difficult.
Oh, I can imagine.
It's damn difficult. So the people that you thought that you knew well in a city of any time, could be 24 million people, you know, the 12 million here, 24 in the tri-state area, you actually don't know anyone. It can be the loneliest experience. So what that teaches you is take everything one step at a time. Don't cross bridges you don't need to cross until you're asked to cross them, because there's too much to take on board. It's a big city. You're being asked to be a professional in a professional firm, in a professional setting where, quite frankly, you're the underdog. And you have to understand you're the underdog, and you have to fight again and again, not only with the market, but with the people that are in New York. It's you, you almost feel it's you versus the world, but you can't take on the world at once. You have to do it one step at a time. And it was a huge life lesson. It's one step at a time. Trying to do anything well takes steps.
Yeah.
And that was a huge lesson for me.